The stock market is a financial market where you can buy and sell shares, bonds, and other securities. Long-term investments in the stock market bring stable profits. The main thing is to maintain a balance of risks, rebalance the portfolio on time, and maintain the chosen investment strategy. We will tell you how to make money in the stock market without losing your invested capital. And before we move on to the most basic and interesting, we would like to ask you and the team to subscribe to the channel and like it. And also, as a bonus, to offer you registration on Bybit is the best platform for earning and investing, link in the description. As well as a promotional code for the first real $1,000 for investing or trading cryptocurrency. Many people view investing in the stock market as a way to save money. And this is true, because investments allow you to protect your savings from depreciation. The simplest example of investment is opening a bank deposit. Many people do this because it's easy, affordable, and looks reliable. But the interest charged by most banks does not even cover inflation. At the same time, the bank itself may go bankrupt at any time, and then you may no longer see your money. A more profitable investment method is the purchase of securities. You can only invest in long-term securities. These are stocks and bonds. In this case, the yield on investment securities consists of two parts. The first part is regular payments. In the case of stocks, this will be dividends. In the case of bonds, it will be the payment of interest on a debt obligation. The second part is income from profitable sale of securities. To cash out part of the income, you must wait for the right moment on the stock exchange and sell part of the package of securities. It is best to sell stocks that have risen in price while in the portfolio in order to earn an additional amount on the difference in prices. The less risk, the less income. Newcomers often simply buy shares of blue chips, the most reliable and stable organizations. After gaining experience, you can make money in the stock market by gradually buying more risky stocks and investing in young projects. Many investors do just that. The bulk of the portfolio is made up of safe blue chip stocks. And the remaining 20 to 30% of the capital is distributed to young and small, but promising projects. There are three alternative ways to make money in the stock market other than investing in stocks and bonds. The most popular way is to invest in ETFs, exchange-traded funds that allow you to purchase foreign securities at minimal cost. Such funds make it possible to buy shares of dozens and hundreds of companies in one portfolio and just as easily sell them. ETF is a fairly simple way to make money on stocks for novice investors and traders. If there is no experience or an investor wants to automate securities trading, you can choose robo-advising, trading using a robot program. This robot contains a special algorithm that collects and analyzes information. A robo-advisor forms a portfolio based on the received data and helps to manage it. At the same time, he analyzes companies, studies analysts' forecasts, calculates risks, and only after that issues a finished portfolio. Another passive investment option that has practically lost the competition of ETFs due to the high commission is mutual funds. Mutual funds, in essence, collect money from a group of people and invest it in stocks, bonds, and other securities. Mutual fund clients, shareholders, receive income in the form of dividends in accordance with the percentage share. In the event that the mutual fund sells shares at a higher price, the shareholders receive a profit in the form of capital growth. How to make money in the stock market through speculation. Speculation is short-term trading. Instead of buying securities and holding them for years, you sell them in a short period, usually less than a month. Speculation can be much more profitable than investing, but it will require more time and knowledge from you. To successfully trade on the exchange, you will need to learn how to analyze the market and more accurately predict prices for a particular asset. In a broad sense, speculation refers to the receipt of income from the difference in prices between buying and selling. So any trading activity is associated with speculation. Unlike investments, speculation has no restrictions on the asset used. You can speculate in stocks and futures. The latter, by the way, on average give more income, but carry more risks, if the stock you bought falls in price. Trading on your own is relatively risky, but in the long run it can provide decent income and, as a result, impressive capital. However, active trading requires a lot of time to study theory and practice. This is a good option for those investors who are willing to spend many hours on training and are not afraid of risks. Ways to work with financial assets. For all others, there is a trust management. Trust management is the transfer of the right to manage your money to a financial institution or trader. The manager invests capital in profitable, according to his